welcome to VSA Capital Tech and Transitional Energy Podcast on... I tell you, it's Boxing Day is the answer. It's the day after the budget. It's when you throw out all the wrapping paper and look at the remains of your meal sitting there rather sadly in the fridge. It must be the 27th of November. Anyway, I'm back from my travels, Phil. I had a pretty amazing time.
You did, and I've been reading about it online, and Andrew, I'm sure you'll tell us all about it.
Well, we obviously last week, most people know we did a special podcast live from the Dubai Air Show with David Keane, the CEO of Aurrigo International PLC. Which was, I've got to say, Dubai was amazing. I've been to Dubai quite a lot of times. I don't mean the city, but the air show and the meetings we had were just really exciting. And I mean, Dubai Airport, it's just extraordinary what's going on. It's going to handle 260 million passengers, have 5 runways, 400 gates. Wow. But the good news is that, they want to have an automated airside. There's no question about it. We had some amazing meetings, and there's going to be a lot more to come there, I think, as well. And we also met with other airports and that sort of thing. But actually, that wasn't really what I wanted to comment on. This you can go and listen to the special we did last week. But what was fascinating at the Dubai Air Show, a few things that really caught my eye. One was there was a stand, or quite a few stands actually, and you could go up to it, and on the left-hand side, they'd sell you an attack missile that they would claim could pretty much shoot down or destroy anything. But you'd then go to the right-hand side of the same stand, and they'd sell you an air defense missile that could basically, it would say, destroy any attack missile, like the one they're selling you on the other side. I mean, it's the virtual economy, or the circular economy, isn't it? You can buy one, get one free sort of thing, but then you've got to buy them again and again and again because you keep shooting down your own missile. It really was hilarious. And I mean, the other thing that was just amazing was you had the Chinese out there in force. The Russians were huge out there. And there was even a Ukrainian stand. And they're all mucked in together selling you equipment for war. It really is fairly amazing. The other thing that got me very excited, and regular listeners will know that this does get me excited, Phil knows it gets me excited, is they had a Comac C919 there on the whatever you call it there, and you could go in and have a look at it. So off I trotted and got into the pilot seat, and the normal pilot was sitting in the other seat, and I had a really good chat with him about the comparisons between the C919 and an A320 and a 737. And I then walked up the back of the plane and sat down as a passenger, and the stewardess very kindly sat opposite me, and I had a good chat with her about what it was like serving as a C919.
Yeah, sure.
Look, the bottom line is this plane is just as good as an A320 or a 737, and it will, Comac will end up as the main aircraft provider, in my view, for China, and much of the Chinese market, be it, places like India and Africa, and it will significantly disrupt global trade, and also Airbus and Boeing. Now, a lot of the parts on the C919 actually are Western-made parts, but again, I think they will slowly convert to Chinese-made parts. So that also really, really interested me whilst I was out there. And then, for what it's worth, not everybody knows exactly what I was doing whilst I was travelling around, but I then got on a plane to Hyderabad in India, which was fascinating. In fact, there's a lot of stories I could tell you about Hyderabad, because it's quite an interesting place. But of course, that is a sort of tech centre. In fact, some people call it Cyberbad. And certainly on the west side of the city, that's where all the modern and tech stuff is. All the big names are there. It's pretty impressive, actually. The east side of the city, which is where I was staying, which was a little bit of an accident, is actually the old part of the city. It's actually twin cities. It's actually different city in many ways, isn't quite so tech orientated, so it's the exact opposite. But there you go, that was my mistake. Anyway, where were we? So here we are. We're back again. We've had the budget yesterday. Funny, I thought Rachel was in many ways quite amusing giving her budget. There was nothing. We knew it all. It all leaked. I did like the way the Madam Deputy Speaker told her off for leaking all the news. She got a right slap on the wrist for that one, didn't she?
Yes.
And of course, at the end of the day, we know that what Labour's all about is basically taking from people who've worked hard all their life to give the money to people who can't actually be bothered to even get out of bed, the lazy benefit seekers. But I'm not going there. I say that every week or something.
You do, Andrew, but we'll get back to tech and transition.
Yeah, let's go back to tech and transitional
but
energy.
There were some bits and bobs on investment, weren't there, in the budget? Is there anything that caught your eye there, Andrew?
Before I say actually about the budget, whilst I was in Dubai, we went to this. I'll be honest with you, it was a drinks party, but at the UK Trade Commission, and but the Labour Trade Minister was there, very brief. It's Chris Bryant, and I've got to say, I mean, I'm not a Labour supporter, obviously, but he gave a very good speech. He actually said that some people, he was worried people might think it was adequate. I actually think it was more than adequate. But he was saying that we do genuinely want to try and boost trade. And actually, yesterday in the budget, there were signs, particularly, I mean, and this does touch tech and transition energy to a certain extent. They were talking quite a lot about, the critical metals industry, obviously in the Southwest, but also the recycling industry and some of that more techie type stuff that goes with it all. So I think that part of the Labour government policies looks quite positive.
Good, yeah.
I'll give them credit where credit is due.
Yeah, well done, Andrew.
Now can they please get out of government and let somebody who knows how to govern the country? Anyway, look, also whilst as well, we obviously had the continuation of the are we in a tech bubble or not?
Yeah.
Who knows whether we're in a tech bubble or not? But I mean, we obviously the results are coming through and demonstrating that maybe it's not a bubble. Maybe it actually is genuinely what it. These valuations are there because they're growing so damn fast. Anyway, there we go. Right. So what else? What did I tell me, Phil? You tell me what did I miss whilst I was away?
Well, it's very interesting that you were talking about the China aircraft developments and how they are advancing in terms of passenger aircraft. I mean, what caught my eye this week was how they are advancing in automotive in Europe, the Chinese firms now. So there were new car sales out figures for Europe. Sales rose by 4.9% in October. Volkswagen, Stellantis, Renault doing very, very well within that. And we've seen, launches from Renault. We've talked a lot about small cars, the importance of small electric cars to the market in Europe. Tesla sales dropped by 48.5%, while BYD's sales jumped considerably. We also saw an announcement.
Well, actually, just before you go on to your next announcement, because I think most people know our view on how the Chinese will dominate EVs. But I thought it was really interesting last week. I did read as I was wandering around. I still read the newspapers on my phone. That Volkswagen are now basically saying that they've got the ability now to move all of their manufacturing for EVs to China. To then bring them back into Europe as effectively a Volkswagen, but Chinese made with Chinese parts and cheaper. And this is it's a role reversal, isn't it? That's not transgender or anything. It's just a role reversal. I mustn't go down that route.
No.
But I mean, it is interesting that they were trying to take Volkswagen into China, and now they're sort of taking China taking over Volkswagen. And this actually is the solution for European car manufacturers. They've basically got to say, look, we can't win the race, all right? Therefore, they've got to partner up with the Chinese and become quasi-Chinese companies in order to be able to compete. And I think that Volkswagen, actually, that to me sounded like a pretty sensible move. We know that Stellantis have done it, haven't they, as well? And
many
Renault
have. Many, BMW, many, the electric
So this is
ones.
the way, and obviously we all know that Volvo is actually Chinese because it's Geely.
Yeah, it's Geely,
But we still think it's a Volvo.
Yeah.
But I mean, this is the way forward. You've got to basically become a Chinese car manufacturer if you're a European car manufacturer. So I thought that was actually very interesting. Sorry, I interrupted you.
No, not at all. I was just going to say, but also Great Wall Motors have announced that they're looking for a new plant in Europe and looking to manufacture 300,000 vehicles by 2029 within Europe. And then in supporting the EV developments and obviously grid storage, the biggest battery maker in the world, this is China's CATL, they've announced this week they have actually started construction of their plant in Spain. And this is a 4 billion euro investment, and they're developing the project jointly with Stellantis.
Well, I mean, that ties in with what I was saying. Actually, on that note, obviously I went down to Hyderabad. I went down to Hyderabad to see Actri, who is the company behind the recent £14 million placement we did into Aurrigo, and the £25 million placement we did into Invinity Energy Systems. So obviously I was catching up with them to see what their thoughts were so far on their investments and any other investments they might be interested in making. But yeah, I mean, this is all very much news that we've been predicting for years, actually. And unfortunately, it's an unstoppable force. It's although we're going to a G2 with America and China, and you've got to be careful not mixing the two. It's difficult to stop China. They've got, in particular, certain industries, they are becoming so dominant, and they are so good at it, and they're 20 years ahead of us.
That's the thing.
Very difficult to catch up.
Yeah.
But, there we go.
Right. Well, you mentioned. You've just been to one of the largest air shows in the world, Andrew, and aerospace and defence. Is Babcock International Group. And what's fascinating about this, and not to bore our listeners, but we always talk about the influence of management on business. And the CEO of Babcock is David Lockwood, who I remember when I used to cover Laird as an analyst. So he was CEO of, very successful CEO of Laird. He was then CEO of Cobham in Defence. And then he joined Babcock. And I was just looking at the share price between when he joined and what it is now. Share price was 200p, around 200p when he joined in August 20, and it's now 1,133p. Shares are up by 117% year to date. Babcock, big aerospace and defence company. They've announced their interims. Revenues are up by 5.4%, £2.5 billion. And they point to strong sales in their nuclear division. I'll get onto that, but offset lower volumes in its land business. They've declared a dividend up by 25%, interim dividend, improve their operating margins. But what's been quite interesting about Babcock is the streamlining and focus of its operations, and this has resulted quite clearly in more orders coming in. Backlog was 9.9 billion, but of note of this, it's been on the news a lot. The first of Type 31 frigates were delivered. They're reopening Devonport Dockyard, investing very heavily in Devonport, and they won a contract of $1 billion for army vehicle support with the army. So it's just great management team, setting terms a long-term structural plan, and the results are coming through, and the share price is doing very, very well.
You're showing your age there, talking about Laird Group.
Yeah. I am. Yes.
That's going back a little bit. Who bought Laird Group out?
Oh, blimey. Oh, you're testing me there, Andrew. Can't remember. Sorry.
I think it was acquired by Advent.
Oh, good God. Yeah.
Yeah. But we're correct. Advent Ventures, whatever they're called.
Yeah.
But we're really going back a long way there, aren't we? Clearly, my memory is better than yours. Either that, or I happen to have a mobile phone in my hand, which has got ChatGPT, and I can quickly ask it the question. But anyway, that would be spilling the secrets, wouldn't it?
Thank you for that one. Right, moving on swiftly. IMI Engineering Group,
another one that's been around a long time.
It has, though 5.9 billion market cap. Shares are up by 36% year to date. IMI, you understand natural resources very, very well, Andrew, better than I do, but IMI specialise in valves and actuators and process automation. And clearly, big users of valves and actuators are the oil and gas industry, the processing industries, and oil processing. Anyway, they announced a disposal of part of their defence business. So they've so £225 million disposal of its Truffalo Marine business, and this makes actuators and valves for naval submarine programs. So it's disposed of that to a US-based defence business, and then they're going to focus on automation, energy, and health care. The businesses obviously they've already got. And just to remind our listeners, they had a trading update in November, which is worth taking a look at. Their organic revenue was 12% higher than their prior period. And the automation business, which is 64% of their sales, had organic growth of 17%. And this automation business provides its industrial automation, pressure switches, valves, linear access, belts, drives that are used in factories, but also their automation serves the oil and gas and petrochem business. So doing very, very well. However, their transport business, the transport side, was only 8% of their 24 sales. I was taking a look at this from the trading update. Their revenue was 9% lower. And they pointed to slowing global truck markets. Now, global truck sales and recessions and the economy, sometimes they're tied together. Global truck sales start to slow because of lower economic activity, but sometimes they don't. But it's something that investors look at closely is the transport market. And what was interesting this week was that Microliase, which is a company we talked about before, it's a UK-based software company. The ticker is SaaS, 114 million market cap, and they have software for truck fleet operators. Okay, and truck fleets do a lot in terms of transporting parts of the automotive industries, but materials for the construction sectors. Anyway, they had a profits warning, basically. They're expecting lower revenues and lower profits. They said that UK direct customer sales were hurt by some customer projects, including a big project with a British multinational retailer that was hit by a cyber attack early in the year. Well, a number of retailers have been impacted by cyber attacks. But
Co-op?
M&S?
Maybe. They've probably all been. They probably haven't all coughed up. Actually, some of them have kept it secret. Yeah. Anyway, so trucks aren't selling. Trucks aren't trucking.
Trucks aren't. In terms of trucking activity, it's impacting, or the lack of is impacting Microliase. So they've lowered their revenue targets, lowered their profit targets. Are expecting an EBITDA of no less than £8.3 million, and in 2024 they reported £11.3 million, implementing efficiency measures as you would expect it to do to increase cost savings, but unfortunately that does impact staff. But nonetheless, they're saying the company is still profitable, cash generative, and has a strong balance sheet. So
I blame Rachel from accounts. She should have put a cost. For every mile they go, they can get a penny, three pence back or something to offset the EV. 3p. Oh, I don't even go there. Forget it. Sorry, listeners. Sorry.
It's all right. We're going to work that one out with a calculator after the podcast.
Spreadsheet. You mean everyone's getting their spreadsheets out and trying? Actually, that was going back to everyone. You have to have a spreadsheet now when you buy a car, don't you, to see what the cost of this is and the cost of that. Yeah, everyone's got to become absolute experts on spreadsheets for when they're buying a car now. Yeah. Anyway, carry on. Yeah.
Craneware PLC.
Yeah.
CRW. Right. So the share price now is 2,140p. They're an AGM trading update. Craneware has been listed for a long time. They focus on software for US hospitals. So this is increasing efficiencies for US hospitals in terms of billing, getting money back from the insurance companies for treatment for clients, but also in terms of drug purchasing. They said that they're seeing strong growth in 25 that they're seeing through the year. Start of their fiscal 26, they've seen momentum continue. They've got an alliance with Microsoft now on their products, and they're saying that that's progressing very, very well. And that healthcare providers in the US are very much optimizing their operational financial performance. I mean, what we saw through COVID was the healthcare, US healthcare providers had other priorities during COVID, and that certainly was treating patients rather than focusing on software. But the software, investment activity has certainly started to come back and has been very positive for Craneware. So just confident of continued growth near term and in line with market expectations for the year. Such Craneware. Now, this is not necessarily technology. This is a retailer that sells technology into the market. That's AO World.
Oh, yeah.
Market cap 591 million. They had their interim results. But this caught my eye. I mean, they're very much, this is very much a consumer electronics seller, but their revenue was up by 14% to £585.6 million in 6 months to September. And that dropped through the profits, pre-tax profits up by 10% to £17.9 million. And they pointed out, going back to the budget, the firm said it faced inflationary headwinds of around £4 million from the national minimum wage and national insurance cost increases.
I blame Rachel from accounts for that. Oh, no, I said I wouldn't do that. Actually, my wife likes AO World. She's always buying things from them.
Well, this might have impacted their
my wife not buying anymore.
Their revenue growth.
Yeah.
Anyway, they have upped their profit view for the year, despite the headwinds on the costs. to 45 million to 50 million pound range. So there we go. That was AO World. Cerrillion is one we've covered in the podcast a lot. Ticker CER, market cap £443 million. The shares are down 22% year to date. And these shares, if you look back on a longer term chart, have been doing very well indeed. So this is billing software and CRM software for telecommunications companies, so landline, but certainly the mobile phone companies, operates internationally. They've got a year-end result. Revenues up by 4%, £45.5 million. Adjusted profit before tax up by 10%, £21.8 million. And net cash, £34.4 million. So all progressing very, very well in terms of the core business. They've upped the final dividend as well. Dividends up by 70%. So all very good metrics. But the chief executive, Louis Hall, sold a 10% stake in Cerrillion, worth £45.6 million earlier in the year. So that might have had some, pressuring on the share price despite that, and also signed new agreements with clients as well during the period. So overall, the company is making good, solid progress.
Yeah.
So there we are. So that is Cerrillion. And I guess a final one from me, and this is a smaller battery company we've talked about a lot. This is Gelion, developing lithium sulfur batteries. Market cap's £45 million. Shares are up by 30% year to date. They had full year results. I guess the main thing for Gelion, it's had 10 million of new funding came in through it during its financial year, or I think it was post-period. It's narrowing its operating losses, but this is all about battery development. As we know, that costs a lot of money. But they've got a couple of strategic partnerships in there as well now. They're working with the Max Planck Institute, and they're brought in TDK Corporation as a strategic partner to help with their developments. So that was Gelion.
Yeah, look, we've talked about Gelion a little bit. Yeah. They've got some very interesting battery technology. The problem is, we all know these battery companies designing a new battery, it's money. They did raise £10 million a month ago, I think it was. Yeah. So that keeps them going for a while because the cash was getting low, and obviously they are burning an operating loss of £6 million. Can't keep that going on forever. But we've talked pretty enough about that one. Now, hang on a sec. You haven't talked about Equipmake, who had finals today.
They did.
Yeah, and actually, you can ignore most of it. They've had a tough year. I think everybody knows they've had a tough year. Obviously, we did quite a lot of funding. We brought Caterpillar in at the start of the year. So, if you look at these numbers, they've done quite a lot of moves, which hopefully will hopefully put them into profit. But what was interesting inside all of that statement is that Caterpillar are potentially happy to put in another £3 million to help the company along. So it just shows how positive that relationship is. And that, it may take a little bit of time, but the future looks pretty good for Equipmake, I would suggest. Stock's unchanged today. Very little liquidity, unfortunately, to 2.3p. They've got some big shareholders, which
that's right.
Do dominate the shareholder list. The other one, finally, I would maybe just mention to you is they call it Latham brackets James Latham.
Oh, James Latham.
Which we've talked about quite a lot in the past, haven't we? It's and they had interims today. They were okay. About okay. The trouble you've got here is very much a sort of family business, isn't it? I think. Yes. And we've looked at it and talked about it quite a lot because they're doing some quite interesting things. But the problem is it's run, I think, as a family business, and that makes it very difficult to invest in. But anyway, there we go. Right, that was quite a good run through today. So we'll call it a day there, Phil. And next week we should be back to normal. Actually, next week. Well, we are back to normal today.
Well, we are, aren't we? Exactly.
We'll be in December, of course. Yep. I noticed an awful lot of Christmas trees are going up early.
They are, aren't they?
We're still in bloody November, and there's Christmas trees going up already. What's going on?
Trying to get you out there spending, Andrew.
No, because we've got... Well, my wife has already put up one. Apparently doing another one this weekend.
Oh, right.
But those are the fake ones. So we're not having to buy them. We just bring it out. Well, I was going to say out of the attic. They're not. They're actually kept up in my son's bedroom because he no longer sleeps because he's got his own house. So it's full of Christmas trees. Apparently, yes. I mean, that will be 2 up. The real tree is actually now sitting in the garden. She bought that yesterday. But that goes up later because the house is warm and all the things fall off. What are they called? Pines fall off.
The needles.
Anyway, what are we talking about Christmas trees on the Tech and Trans Energy podcast? Look, I hope everyone's enjoyed it, found it useful. We are getting comments nowadays on our podcast from all around the world, which is great. Do keep sending us comments. We love getting them. If you want us to talk about a particular company, do tell us. Or if you just want to write us a check, we'll take that.
Yes.
Particularly it's Christmas. We
Absolutely.
Like a Christmas bonus. Anyway, we'll be back next week. Thanks.
Just in then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.